Today's rapid fire question is, what is a conditional approval? Is it good or bad? Now, if you've gotten a conditional approval, then this is a very good sign, because what this means is that the initial underwriting team reviewed your loan application, all the documents you provided to your loan officer, and they uploaded and submitted to the underwriting team. And they said, look, based on everything that we've seen, this loan is approved as long as these conditions are met. So let's take a look at some of the standard conditions that come about. Homeowners insurance policy. You're going to be hunting for quotes, trying to identify which homeowners insurance company that you're going to be using to get your policy. So by the time you get to this stage, you're going to have identified the agency that you're going to go with, either a big shop like a Geico or maybe a local shop, and then getting your policy. Now, the insurance agent is going to be requesting a couple of things. Number one is the loan number. Number two is the mortgagee clause. You can request that from your loan officer. So the second common condition that comes is going to be an earnest money deposit confirmation. What this is going to be the deposit that you put down for your purchase contract. The underwriter wants to see this money being cleared out of your bank account into the title company. So if you provided a check, they want to see that check cleared. So it's going to be a canceled check image plus the bank activity report that you can get from your online bank statement, or a wire confirmation. So it's going to be the wire confirmation from your bank account plus the bank activity showing it being withdrawn out of your account. The third common condition that comes about is going to be ordering your appraisal. Now, ordering your appraisal is under your control, because you have to provide your credit card information and then have the loan officer order that appraisal for you. Now, for our workflow, we order it the moment we submit the file to underwriting. Some other lenders, their workflow might be a little bit different, but I recommend that you check with your loan officer on what their workflow is, because an appraisal is going to be one of the longest lead times to get completed for your loan application. So I highly recommend getting this done at the very beginning of the process. So while you're working with your loan officer to get those conditional items cleared that requires your action, there's actual conditions being worked on in the background by the underwriting team or third-party organizations like the title company. So let's take a look here. First one is going to be verification of employment. I highly recommend providing your loan officer the correct HR or manager contact, because sometimes it's going to take a lot of effort to verify your employment if we don't have the right contact information, the right phone number, email address, name, who to call. So I highly encourage you to provide that correct information. The second one is going to be title ordered. So this one's going to take a little while depending on where you're purchasing your property, because some places they're digitized and they're going to be able to extract and obtain that information fairly quickly. Some places like Alaska, they actually have to fly someone to Alaska to go to the courthouse to obtain those documents, those title documents, and then bring it back to the underwriting department. So it really depends on your location. And then the last one is going to be tax certification to make sure and verify your taxes. There's no tax liens, there's nothing outstanding. So the last part of this is going to be possible conditional items that might require your action or attention depending on your situation and scenario. So for example, mortgage statement for additional real estate owned. If you own a investment property or a second home, the underwriting team is going to want the latest mortgage statement for that property if you have a mortgage on it, as well as a homeowner's insurance policy for that additional real estate owned if you have one, regardless if there's a mortgage or not, as well as the HOA statement for that additional real estate owned if there is an HOA there. Now, the last three is going to be it might be updated bank statements, asset statements, or retirement accounts if you provided something that was outdated or it's been a long time since the last time you provided those documents to the loan officer, and then they went into full submission to the underwriting team, as well as updated pay stubs. And if you are switching jobs in between going through the loan process and then there's a very short gap, the underwriting team is going to want your offer letter. But by this time, the loan officer should have shared that with you. I hope this video helped you understand what a conditional approval is. I recommend watching this next video on the 2 things you should avoid to stop frustrating your underwriting team and your loan officer. Thank you so much for watching. Please like and subscribe and comment below. Appreciate you, and talk to you later.